Novo Nordisk and its share price are down significantly from the highs reached in early 2024. That has a lot of investors asking if Novo Nordisk stock is undervalued at current prices. I'm going to answer that question in this video by conducting a discounted cash flow valuation analysis on Novo Nordisk stock. So I'll share with you precisely where I'm getting all of the numbers and inputs I'm using for the model so that you can see for yourself whether the numbers I'm using are accurate, too low, or too high. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So you can see here the price action of Novo Nordisk stock in the last 3 years, soaring from about 2022 and 2023, and then reaching the highs in mid 2024. And in recent months, it's been on the dip here. So to make my intrinsic value price estimate for Novo Nordisk, I need a few inputs. I need the company's market cap at 382 billion, the cash and equivalents balance at 8.5 billion, and the total long-term debt at also 8.5 billion. I also need the company's average diluted shares outstanding, which stands at 4.46 billion. I'm also going to utilize Wall Street analyst estimates for Novo Nordisk expected free cash flows over the next several years. And according to Wall Street, they think the company is going to deliver $9.6 billion in free cash flow in 2024, $13 billion in 2025, $17 billion in 2026, $19.5 billion in 2027, and $22 billion in 2028. Of course, this free cash flow growth is going to be driven by the company's treatments on obesity and diabetes, and they found remarkable success in these two categories in the last 3 years. I also need the company's beta, which stands at 0.17. Remember, beta measures a company's risk compared to the S&P 500 index or the average stock in the market. When a company has a beta of 1, that means its risk is equal to the risk of the average stock in the market. When a company has a beta of 0.17, it means it's significantly less risky than the average stock in the index. That might be a little bit misleading with a company like Novo Nordisk and with healthcare companies overall. Healthcare companies are not strongly correlated to economic performance. Healthcare companies do not depend on whether or not people have a job or whether or not people are experiencing growth in income. They do to some degree, but nowhere near the levels of other companies, let's say like a company like Macy's, a department store for clothing. When you're recently hired for a job, you're more likely to go to Macy's to upgrade your wardrobe to prepare for work. For a company like Novo Nordisk, if you recently get a job, it's not going to make you want to go out and look for diabetes treatment or obesity treatment. It's unrelated to what's going on in the economy. Sure, if you don't have a job and you don't have health care and you can't pay for the treatment, you're probably not going to seek out the treatment. So in that way, it is correlated. But in terms of needing this treatment because your economic position improves, that's not really how this company's business works. So for that reason, you see this very low beta because it's not correlated to the economic performance, the ups and downs of the economy as strongly as some other companies might be. So now that we have all the inputs we need, we can jump into our valuation model for Novo Nordisk stock. And let me draw your attention first to the free cash flow estimates starting at 9.6 billion for 2024, rising all the way to 22 billion in 2028. Now, these free cash flows are expected to increase all the way through 2034. And from that point on, I'm forecasting the company's free cash flow to grow at a long-term rate of 5%. You remember I said the first few years I'm utilizing Wall Street analyst estimates for free cash flow growth, and those estimates suggest that the company's free cash flow is going to grow by 22% over the next several years. After those initial years, I have the company's free cash flow growing at 11% for the next 5 years. And then I have the company settling down from the year 2035 onward, growing at a free cash flow of 5%. So these free cash flows on the top level here are the actual numbers of the free cash flow. The numbers below are the present value of those cash flows. Money in the future is worth less to us than money today. And so we need to take these future cash flows and discount them because they are coming to us in the future. We need to derive a present value for those cash flows. And that's what I have here. The present value of all of the cash flows between 2024 and 2034 is 181 billion for Novo Nordisk. And then the present value of the terminal value of the cash flows, meaning all of the cash flows expected for the company between 2035 and infinity, is expected to be $1.8 trillion. So the value of operations for Novo Nordisk, the cash flows, the present value of all of the cash flows expected between now and infinity is roughly $2 trillion. So huge free cash flow generating capabilities for Novo Nordisk, again, driven by those breakthroughs in obesity and diabetes treatment. So the discount rate I utilized is 6.31% for Novo Nordisk because the company's weighted average cost of capital, the reason the company's weighted average cost of capital is so low is because the beta is extremely low at 0.17. The beta plays a significant role in the company's weighted average cost of capital. And so I've done scenarios, which I'll talk about towards the end of the video, increasing the company's beta to see what value we get at higher betas. So the value of equity with the beta at 1.7 or 0.17 and 4.46 billion shares outstanding suggests that the intrinsic value per share for Novo Nordisk stock is $446. Now, the current market price is only $86. So that suggests that Novo Nordisk stock is undervalued. Now, looking at it with higher betas, I looked at it with the beta of 0.75, and that suggests the value of $165. You notice that it's way below the intrinsic value with the beta at 0.17, but still above the current market price. And even at a beta of 1.25, the intrinsic value comes in at $104, which is still above the current market price. And at a beta of 1, you get an intrinsic value of $128. So the 4 different scenarios I evaluated for Novo Nordisk stock does indeed suggest that this stock is undervalued at the current market price. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.